Uh, all right. Good morning, guys. You look orange as fuck. Mm, that's probably, yeah, it's probably like that or this. Something like that. One of those two things. Did that help? Yeah. How many commas did you make this morning? A few. Straight to 5,100? I hope so. I would like to be correct. Were you up all night playing futures? A little bit. Did a little bit of feuding. ES still hasn't retested its overnight low, I don't think. Overnight low was like 210. So still a little ways to go on that. And then see how things go from there. VIX is rising along, like vol's rising alongside put volume, which is kind of a big deal. This whole thing's fucked. I mean, I don't know what else to say, but look at me, I was right. Ha 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 ha. So courageous. I know, thank you. Just keep saying that over and over again. Just don't dance. I mean, I wanted the market to crash. I didn't want it to crash this way. This is the worst way. Do you have any words for Tom Lee? Who? Who's that? The drummer? Thanks for all you do. Don't be too spug in your stock goodness. Hope we survive the coming depression. Yeah. We buried Tom Lee. The disrespect. What's up, Jackson? I never see you in here anymore. Things look incredibly bleak for distributors. Things look incredibly bleak for the global economy. Don't worry, we can start a war in a few years and it'll be fine, like a world one. Is this legit going to be a recession, depression, you think? Well, Smoot Hawley caused the depression of the 30s. This is way worse. And at a period in time when globalization of the US economy is, orders of magnitude more relevant than it was in the 1920s. Maybe then we'd attack Greenland. Who's gonna stop us from... Okay, like, seriously, if we wanted to take Greenland, no one's gonna stop us. You think Denmark's gonna fight us? No. Denmark doesn't even, like, own Greenland entirely. It's, like, a semi-independent territory. I don't know why the fuck we want it. It's just a giant sheet of ice. We just want to control shipping routes. Rare earths. Purchasing a raffle ticket to work as domestic help in the Gherk lair during the coming depression. Thank you so much, regards, Kiki. An acquaintance of mine actually bought a house last week. I winced, but they didn't ask me. Houses are about to be real cheap. Once people start losing all their jobs. It's kind of awkward, I know. Trump doesn't understand the projection maps, and he thinks it's huge. They just want to buy up the beachfront property before global warming melts the polar ice caps. Actually, the Panama shit has some validity, which is why it's never talked about nearly as much as everything else. Almost 4 years. Jesus Christ. It's been fun though, right? Once people start losing their jobs, man, I'm glad my job is buying puts. More down today? Sure. I don't see anything really stopping us from going down a lot. We're gonna get capitulation rallies, keep an eye on them. But I mean, shit looks pretty terrible. Gold's starting to sell off. A dollar bounced back today, but yen's up to like 145. The 2 years down another 4% to 3.5. 5 years down another 3.75% down to 3.6. Now the 20 and 30 year are starting to drop, so people are getting really afraid. China imposed reciprocal tariffs overnight, and we're basically like, fight me, orange man. I'm still convinced Trump got Greenland and Iceland mixed up. He wouldn't have been the first one to do that. Many of his supposed ancestors also made the same mistake. That's definitely been something. This is just profit taking. Yeah, it looks like it. Like low volume, kind of low volume bounce. We'll probably retest the low at least, and then obviously you got to watch out for a potential like double bottom. But yeah, this looks like a fairly low volume bounce, at least compared to the prior one. That like what was it? It was like the 210 to 260 bounce. We did leave an upside gap, but I don't think we're gonna fill it anytime soon. There's a downside gap on this bounce at like 196. But Basan asked other countries not to do that. Why didn't China listen? I told you guys this weeks ago. There's only one potential outcome to implementing tariffs, and that is reciprocal tariffs. And then once reciprocal tariffs stop reciprocating, foreign countries will start to make trade agreements that specifically exclude the United States. And they will have beneficial trade agreements, and we will not. Hey, Gherk, why is BTC holding into all of this the past two trading days? We're down 8%, but BTC steady, very weird. Well, first of all, BTC is used for leverage, and the need for leverage right now is extremely high. I mean, it's just hedge funds literally just use it as a leverage dollar. That's like 90% of why its value goes up. Remember that like almost all of the Bitcoin in the world is held in very few wallets, and most of those are, institutional. Um, but it's also, akin to gold in its um, extrinsic value perception. People who buy it do view it as a inflationary or dollar hedge, even though it's not. It's because it is just in like leverage dollars. um it's still viewed that way, so there is some sentiment backing stability in it during this period. However, if things keep going south, hedge funds will dump it because it's extraordinarily risky. And if hedge funds dump all their BTC, it crashes, which has happened in every like bull bear swing on it. Just playing devil's advocate here. What happens when Canada, the EU, and Mexico all agree to free trade agreements and a block on China? Why would they block China? See, I mean, everyone wants access to like China's financing, so especially if they're not going to be, trying to get a hold of dollars. Congress might take away his tariff privileges. They might. Yeah, we might see the Republican Party turn on him. Why aren't you in charge of the world? Oh, people wouldn't like that. Can't believe it's been 40 months. Thanks for all the laughs. Thanks, dude. Re Beautifully put. Any way to tell how this will go, like long term? No. Hence the uncertainty and everyone freaking out. That's why VIX is almost at 40. Or, well, almost back at 40. Dirk told me he made six figures overnight. Four Lego, two Bionicle. So proud of him. Wait, aren't Bionicles also Legos? So just six Lego. I mean, gold just backed my mostly sentiment too. No, it's not. I mean, gold actually has a physical use case. It's not probably all that pertinent, but it is truly a commodity. It's also been, the store of wealth for all of human history, pretty much all of civilization. Wherever you go in the world, gold has value. Bitcoin can't be exchanged for goods or services, which is a big difference between gold and Bitcoin. You could try, it's very difficult. We're down 15% from all time high. Are we now in a crash and not a correction? Kind of in between. We're not in a crash yet, technically. Um, but we are in a very, very deep correction. I would say that, you know, we're probably entering a bear market in a bear market. Will the secondary car market skyrocket after this? Sure, but who's going to have money to buy them? Are people going to buy overpriced used cars? You know, last time around we had a lot of free money to buy shit with. This time we don't. It's something to at least consider. Also, Carvana they still have, you know, massive debt issues. They can't really deal well with a contracting economy. If car sales decline, they're not going to be able to meet the interest payments on their exorbitant debt, which is a big problem, especially going into the second half of this year, where that payment in kind falls off, and they have to start making you know, actual interest payments on that debt. Gherkin would make calls illegal. No, I wouldn't. Too mean might hurt someone's feelings. Probably. Aren't you in charge of my port? Nice. Nick, welcome to Dillionaire, man. Thank you so much. Oh, wait, hold on. Hit me up on the Discord. I'll get you added after the stream, dude. Now, I've given up my ice cream sandwich addiction. Thanks, Captain Insano. Ayo, Swaffy. Welcome to Dillionaire, man. I'm just gonna play this song all day. Thanks for all you do. Thanks, man. Happy to help. I'm back. Did I miss anything? Nah, not much. Grackle, thank you so much, dude. Guys, welcome to Cornishon. Give Grackle a shout out for hooking you up. I think the market's waiting for JPOW to say something to save us, but all he will say is we keep looking at the data and then we tank into end of day. Yeah, I mean, JPOW has the chance to really fuck this up, honestly. If the Fed is mulling cuts right now, it's because they think we're going into a recession. There's no other valid reason, right? I mean, all the banks have basically stated, like, you know, the chances of the Fed cutting are extremely low, but the swap market's disagreeing, which means the swap market's also betting on a recession and the need to cut rates as an emergency measure. What stress test? Remember, they don't want to do that anymore? But yeah, I know. Can I get a pigeon whale? Can the pigeon whale get a Viking themed song? Interesting. Maybe. I have a lot of Pigeon Whale songs. I'm expecting more pigeon whales to flock into our ranks with how much money the pickle jar should be making from this. Interesting. Maybe. What's up, Lawrence? Just wondering when should go long Wendy's or the company who provides their dumpsters. Should I FOMO now or confirm via gap up on unemployment? PS Department of Energy will be Department of Exxon end of year. PPS stock god. I'm 50K this week in my brokerage. Oh, that was yesterday. Okay. Nice. Spike in unemployment. I mean, what are we gonna do? Like, look at our deficit. How much? We're gonna try another round of stimulus. It's gonna fuck us if we do that. I mean, it might float us another year, maybe two, but then we're just gonna end up in a worse spot. Need to. Thank you so much, man. Welcome to Cornichon, guys. Give Need to a shout out. Life-changing couple of weeks. Made like 150K. You're the man. Learning so much. That's awesome, Gummies. Thank you so much, dude. Hey, I can see your message. Look at that shit. Nasdaq 100 sinks 20% from record highs. Set to enter a bear market. Oh yeah, Nasdaq's down about 20%. I was too cautious to make that much money from this. You know, honestly, I wasn't even like that prepared for this. I didn't have like a lot of Vega puts. I have like a few for like June 2026. And then I just had like my June puts, and I had straddles the last couple of days, but they keep getting incrementally smaller because their fucking contracts are so expensive. Huckleberry, my man. Welcome to Cornichon, guys. Val Sinestro, welcome to Zillionaire, dude. Shoot me a message over on the Discord, and I'll get you added to the country club after the stream, man. Thanks for making one of the most frightening events in history a fun and memorable time. Riku to the pickle jar. Thanks, Rigorous. All the Trump-hating finance guys on the Mario Narwhal space called this morning, said Europe's going to call J-Powell, tell him he has to cut rates. Space call equals rate cut confirmation. If J-Powell cuts rates, we're going to crash. That'll be that. Like, the short end's already getting squeezed, right? Remember I told you everyone went short the short paper in order to try to like prop up their leverage against the BOJ rate cuts. Those people will get fucking destroyed if J-Pow cuts rates rapidly. They will blow up. The dollar will probably break. That would be very, very bad. I'm sure J-Pow is well aware of that. I thought Doge was gonna get us 5K checks. So sorry, Elon had to go back to work. Hey Gherk, when crash? My port isn't a billion yet. I actually feel bad for the poors, so I won't say it. Cuckoo. Thanks, Costellosaurus. 5150 Lambo Gherk? Sadly been missing you in the pickle jar. How you doing, Posty? New job's rocking, but I miss the shenanigans. Love you. Thanks, dude. You'll be back, right? When you have some more free time. Is the Powell speech on right now? I thought the Powell speech was at 11:25. Yeah. Powell's speaking at 11:25. I've got it right here. Hmm. A little bit of support here at 51.75. If this slips, we drop to 51.50 probably. So we'll see what happens with this little bounce. It's not a very strong one again. Oh, look, the Fear and Greed Index hit 4. Fucking fantastic. Do you think we get a chance to load up on more puts soon? I mean, you'll get capitulation rallies. There'll be bear rallies. You know, those will be your opportunity when they happen. But if we're really crashing right now, which very, very close, not quite there, but very close, then no. No. But you'll get chances to buy the bottom, you know, and experience 10% days on the index. So I remember a long time ago I told everyone, you know, everyone starts out like buying Vega, and then they buy Delta, and then they buy the Gamma, and then the Vana, right? Because like the options just keep getting more and more and more expensive, and you can only really afford to get you have to like shift your exposure expectations, but there's still ways to make money off of this without, you know, buying fucking at the money options. You just have to trade differently. You got to adapt. But if you look at like the bid ask spreads like across the chain, or you look at like vol around spot, you know, there's a lot of price changes, and there's far out of the money options right now relative to the moves in spot because they're so insanely sensitive to the volatility. Is this just getting started? I'm just losing monies. I mean, it's been going on for like a couple of months now. To solve the deficit, maybe the U.S. tax office can tax non-U.S. citizens, non-green card holder anywhere in the world. In addition, 9 billion taxable individuals is nice. Nice. I think they might have to raise rates before they cut them, depending on inflation. I don't know. We're gonna see. I think Powell's speech today is gonna maybe tell us a lot about if he's gonna kiss the proverbial ring or if he's gonna push back against the executive. I think Powell cares a lot about his legacy, even though it's shit. I think he cares about it a lot. And I could see him becoming very belligerent now that tariffs are enacted and inflation is uncertain. Would the speech pump this back up if he says the right things? I mean, define back up. It could pump it a bit. And CTA triggers? CTAs are going short. They've been going short since like 56.96. Ooh, we got a new song from Boop. Thanks for all you do. 100% gains on my new tiny port challenge this week. GS rocks. The pickle.
I knew it was coming yesterday. Like I could feel it in the air. Remember when
GS
I said it was really
rocks.
spicy after we crossed $10? I mean, it looks pretty good. Did you guys see those charts I posted? It's like the things that I said are coming true. I mean, I can say this much. We've got buy hold, we've got short interest, we've got options, we got fucking FTDs out the ass.
How you get that?
We got a seal, like a small seal. They have a polar bear, we've got a dolphin.
I said bloop. Blah, blah, bloop.
We've got fruitcake, sourdough, pastry. We've got lots of European butters. We've got cocktail weenies, custard and mayo. We've got everything, 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 everything. We've got all the things we want. We've got all the things we want. Like, how many people are paying attention to this? I think you're missing the most important part. I'm gonna bring this up one more time. We got cat, like a regular one. Fantastic penis art. Pigeon whale. Turtles too.
How you get that?
We got engaged Vop, J Fresh. We got space stuffing. Also, don't forget tender chicken daddy.
Let me get that.
We got Santa pickle, support resistance pickle, and the pickle rocket, rave pickle, whatever that one is. Everything, 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 everything. We've got all the things we want. You get it, girl. Maybe. I'm not gonna tell you. We'll see. I'm trying to just,
If we lose 40, maybe 25, but more likely 51.20. 51.20 is a really important level. And we're only $20 off right now.
if that's not simple enough, I can't help you.
VIX at 43? Holy shit. Fucking Christ. What a mess. Looks like we're slipping 40. Bulls might be trying to get some support around this level. Let me see what Delta looks like here.
Costellosaurus put their
That's not
pickle in
great.
my jar holding my June puts to 0 or 1 million. Have to risk it to get the biscuit. Hope you're wrong and we close at 5,000. Can't wait to straddle the weekend. PP3.
Thank you so much, Castellasaurus. Brett, thank you, dude. I appreciate it. Slot machine, for sure. Does anybody remember who made Let It Fall? I was trying to find it in my DMs, but I can't. Oh, you know what? Maybe I saved it. Did I save it? No, I didn't. Son of a bitch. Fear? I bet. Oh, wait, did we just test 5120? Aha! I fucking did it, boys. Woo! We have to close there? God damn it, I still have a chance. Get fucked, dork. It doesn't count when you're from the future and that handsome. Just saying. Psh, there aren't any boys in the pickle jar. Huh. Interesting. I literally made 100% on a put for the duration of that song. I'm legit stressed. What, dude? Just wait. I mean, that's an option. Hmm. Ah, it was clueless calls.
Well, balls can't pump through gamma neutral. Brother Gherkin comes to us all.
Costellosaurus put their pickle in my jar. My friend just asked me if I'm buying anything. I replied, more puts, cuckoo 3.
When we fail, the resistance is streaming in front of us all. Speaking words of wisdom.
Oh, like a $50 bounce.
Let it fall. Let it fall. Let it fall. Let it fall. Fuck your cause. Streaming words of wisdom. Let it fall. And when bulls have sold so many puts, for their margin will be called. Gherkin has the answer. Let it fall. Though we reached an all-time high, the recession can't be stalled. Gherkin streamed the answer. Let it fall. Let it fall. Let it fall. Let it fall. Fuck your cause. Streaming words of wisdom. Let it fall. Let it fall. Oh, let it fall. Let it fall. Fuck your cause. Only words of wisdom. Let it fall. We know not when it's coming. When it does, we'll have a ball. The pickle jar is ready. Let it fall. When the bulls can't pump through delta neutral, Brother Gherkin comes to us all. Speaking words of wisdom. Let it fall. Let it fall. Oh, let it fall. And fuck your call. Streaming words of wisdom. Let it fall. Yes, let it fall. Let it fall. Let it fall. Oh, let it fall. Only words of wisdom. Let it fall. Dork, what have you done? What'd you make for dinner? Why was it pork?
Thanks for making Gamma Strike. Thank the team for all their hard work. I'm still learning, but it's paid for itself. 10x in a week. That's fucking awesome, dude. Well done. We launched before market crash? Yeah, I told you. At least we'll keep the user base we have now forever. We're never going to get any new subscribers, but we've locked in the ones we have for life. Perfect. Is this going to fail at any point? Pump it into the Powell speech, maybe? There's some profit taking. What do we need to lose for Ivy to turn up? If 75 will do it. Jesus, this is horrific. I'll go 72. BS retesting 5200. Slip 75. Well,
Mind
slip
swap put
70,
their
probably
pickle in
back
my
to
jar
50.
10.
Thank you so much, man. Is there a message with that, or? I made 2.5 times my yearly salary so far this year. Thank you for all you taught me throughout the last years. I fucking love you. That's fucking awesome, dude. I'm really glad to hear that. Congratulations. Oh shit, squeezies. That was kind of nuts. $25 gap up. No, not a gap, but capitulation rally's getting wild. Hmm. Stop this. Fucking $100 bounces. Yeah. This is like a market crash. See if there's support at 5,200. Maybe not. Nope. Back to 70. A bit of support at 200, but it looks like it's breaking down. Mm. Flat gamma though. It's back under 40. Oh, more pump? Ooh. Coming in hot. VWAP is at 52.85. Yes. Which is probably like 50 here. Yeah, probably about 50. A little resistance at 25.30, 25.30 right here. And then maybe at 45. Hmm. Hmm. Start to run into some resistance here. 240, 45, 50. I think there's a little bit of delta here too. Not much, but some. Failures can still be pretty dramatic, and this isn't a full reversal from the drop earlier on NQ nor ES. So maybe watch for a failure at VWAP just before VWAP. Tried to test it. Right This might form a head and shoulders. Right around there. Regain 30. I don't know for my head and shoulders. Yeah, maybe this is still the head part. What's this look like on the 5-minute? Okay, maybe not. Still just bearish consolidation. An interesting Friday. Losing 25. Maybe not yet. Hold on, let me see something. I need to check something else. Powell in 12 minutes. Vietnam wants to cut their tariffs down to 0 if they're able to make an agreement with the US. Trump says this would be a perfect time for Powell to cut interest rates. Powell is always late. Oh man. All right, yeah, so that's pretty obvious what he's doing. JPO acquiesces to Trump. What market do? I mean, I still think there's a substantial number of participants that are short the short paper. Yeah, JPEG doesn't need to do anything. You're right. Is anyone trading options at 100% IV? Oh, come on. They're only 84%. Support at 200 again? Maybe 191, like right here. And then build out the head and shoulders for the distribution. Vol's turning up pretty quick. I don't know. Maybe there is no right shoulder. Oh, there it is. Dad? Dad what? Father? What is it? Oh. Why isn't this started? Oh, fucking Christ. Hold on. It doesn't look like it's started yet.
The slower but still solid. At the same time, surveys of households and businesses report dimming expectations and higher uncertainty about the outlook. Survey respondents point to the effects of the new federal policies, especially related to trade. We are closely watching this tension between the hard and the soft data. As the new policies and their likely economic effects become clearer, we will have a better sense of their implications for the economy and for monetary policy. Looking across many indicators, the labor market appears to be broadly in balance and not a significant source of inflationary pressure. This morning's jobs report showed the unemployment rate at 4.2% in March, still in the low range where it has held since early last year. Over the first quarter, payrolls grew by an average of 150,000 jobs per month. The combination of
Holy
low
shit,
layoffs,
this is weird and
moderating
quiet.
job growth, and slowing labor force growth has kept the unemployment rate broadly stable. Turning to the other leg of our dual mandate, inflation has declined sharply from its pandemic highs of mid-2022. It has done so without the kind of painful rise in unemployment that has often accompanied periods of tight monetary policy that are needed to reduce inflation. More recently, progress toward our 2% inflation objective has slowed. Total PCE prices rose 2.5% over the 12 months ending in February. Core PCE prices, which exclude the volatile food and energy categories, rose 2.8%. Looking ahead, higher tariffs will be working their way through our economy and are likely to raise inflation in coming quarters. Reflecting this, both survey and market-based measures of near-term inflation expectations have moved up. By most measures, longer-term inflation expectations, those beyond just the next few years, remain well anchored and consistent with our 2% inflation goal. We remain committed to returning inflation sustainably to our 2% objective. Turning to monetary policy, we face a highly uncertain outlook with elevated risks of both higher unemployment and higher inflation. The new administration is in the process of implementing substantial policy changes in 4 distinct areas:
Oh, there they go. They
trade,
turned them on.
immigration, fiscal policy, and regulation. Our monetary policy stance is well positioned to deal with the risks and uncertainties we face as we gain a better understanding of the policy changes and their likely effects on the economy. It is not our role to comment on those policies. Rather, we make an assessment of their likely effects, observe the behavior of the economy, and set monetary policy in a way that best achieves our dual mandate goals. We have stressed that it will be very difficult to assess the likely economic effects of higher tariffs until there is greater certainty about the details, such as what will be tariffed, at what level, and for what duration, and the extent of any retaliation from our trading partners. While uncertainty remains elevated, it is now becoming clear that tariff increases will be significantly larger than expected. And the same is likely to be true of the economic effects, which will include higher inflation and slower growth. The size and duration of these effects remains uncertain. While tariffs are highly likely to generate at least a temporary rise in inflation, it's also possible that the effects could be more persistent. Avoiding that outcome would depend on keeping longer-term inflation expectations well anchored, on the size of the effects, and on how long it takes for them to pass through fully to prices. Our obligation is to keep longer-term inflation expectations well anchored and to make certain that a one-time increase in the price level does not become an ongoing inflation problem. We'll continue to carefully monitor the incoming data, the evolving outlook, and the balance of risks. We're well positioned to wait for greater clarity before considering any adjustments to our policy stance. It is too soon to say what will be the appropriate path for monetary policy. We understand the benefits of a solid economy where workers can find jobs and inflation is low and predictable. We also understand that elevated levels of unemployment or inflation can be damaging and painful for communities, families, and businesses. That is why we at the Fed will continue to do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Most importantly, thank you for being here. This feels like quite a moment to be speaking with you, and I want to thank you for your time. He's got it. I want to thank you for being here, and thank you for taking the time to speak with this group of business journalists. Also like to give a special thanks to Heather Long with the Washington Post, who helped make this event possible. So for starters, sir, how's your week been?
Just fine, thank you.
Care to elaborate?
So far, so good.
Chair Powell, yes, thank you so much for being here and taking our questions. You were talking about the economy as being a very strong economy. You characterized inflation as coming down, employment as being very strong still. However, President Trump earlier this week, when asked about the market volatility we've been seeing, said the volatility was, quote, to be expected. This is a patient that was very sick. We inherited a terrible economy.
Looks like we're headed back to
A lot of voters did
175.
and do agree
Bulls
with
are
that
trying to
assessment, at least in
establish some
part.
support here, but
I'm wondering
they're
how
not
you would
doing a
respond to that assessment and
fucking
the disconnect
fantastic
between
job. Can you guys hear
the state of
this?
The data and the way a lot of people are feeling.
I
about
can
the
like,
economy.
it's very
Sure.
quiet.
So let me just be clear at the start. I make it a practice not to respond to any elected officials' comments, so I don't want to be seen to be doing that. It's just not appropriate for me. But the situation, I think, is this, and people, when they're surveyed, they are unhappy about the economy. That seems to largely reflect the increase in the price level that happened when inflation was high, 2021, 22, and 23 largely. Inflation is now back down to much more normal levels. Unemployment is low, the economy's been growing, but people are still experiencing.
Yeah, I checked a couple other
high
streams.
price
They
level.
suck
In other words,
too.
prices don't go down. They know they're paying much more for the basic necessities of life. And they're right that they are, and they're not happy about it, and they're right not to be happy about it. So I think that accounts for the negative sentiment. We, of course, we're looking at inflation, which is the change in prices, And we're seeing that that has come down quite a bit, and that, you know, unemployment is actually low. It's sort of very close to measures of maximum employment, and the economy's growing. So all those statistics are good, but you know, the price increases of the past few years are weighing on people's budgets.
So I'm from Milwaukee, and I've been talking to business leaders, executives, and consumers in our community, in our region, for the last few weeks, mostly before this week's news. Chairman, they're troubled and they're nervous. One business owner told me, if there's a hint of a recession, we're cooked. And he asked me to share that with you. What's your response?
So I guess I would say, let's start with the fact that the incoming data right through this morning's employment report, which admittedly is from roughly a month ago, the week of March 12th, they took the data in.
Lost
Still
75,
shows a solid
headed towards
unemployment's
50.
still low. I
Vol's still
understand the uncertainty
increasing.
that's weighing on people. You ask about a recession. We don't actually, we don't make a probability forecast of how likely it is for there to be a recession, but many outside forecasters do, and many of them have raised the likelihood, albeit from very low levels. It's not something that anybody now is forecasting, or some people are starting to. And so there's not much more I can say about that. I realize that the uncertainty is high, and you know, what we've learned is that the tariffs are higher than anticipated, higher than almost all forecasters predicted. We still don't know where that comes to rest, though, and we're just going to have to see that through.
At a congressional hearing last year, one of the U.S. representatives said that you were pretty boring, and you thanked him and said that you considered that a very high compliment. And in fact, I feel like it's one of the roles of the Federal Reserve, especially since the housing crisis, to be kind of a ballast, especially in the face of the volatility of the markets and the dramatics that we can experience with the economy. Very steady, no surprises, very reliable. In a moment like this, which also has a lot of drama and unpredictability, but it is not necessarily from an economic crisis, it's by design, it's political. How do you see your role in this moment?
So I think all of the values that you touched on are, in fact, the values that we try to live by. You know, we're driven by, you know, analysis and careful thought and discussion and debate and the merits of things. We try to stay as far as we can from the political process. We don't look at political cycles or things like that. So, and I think people expect that from us. They expect us to tell the truth, and that's what we're going to do. But at the same time, we don't want to be part of the broader
Slipping
political
70
discussion
again
about the wisdom
on the bounce. So
of
bounce
policies that are not
rejected.
assigned to us. We're not responsible
lower
for
low.
trade policy, immigration policy, fiscal policy. So we don't
See if
comment
we
on
lose
those decisions
60
are made
here.
by others, and what we do is we use our tools to try to achieve the goals that Congress assigned us, which is maximum employment and price stability. So I like to think that over time we're a source of calm, rational analysis and also of stability. That's really what the business that we're in is, providing financial and macroeconomic stability to the public. That's really our purpose.
So how can businesses and individuals and the Fed make plans for the future when so much is being dictated by the actions of a single person? And do you see yourself as the consoler-in-chief on economic matters?
No, I think, take a step back. What's happening is, as I mentioned, the new administration is making, you know, significant policy changes in trade, immigration, fiscal policy, and regulation. And you're still just a couple of months into the administration, and that process will take place. And at a certain point, the new policies will be on the table. They will be having the effects they're going to have on the economy, and uncertainty will decline. Right now, there's a lot of uncertainty about where all that's going to sort out, the forms it will take, and what the economic effects will be. If you fast forward a year from now, the uncertainty should be much lower. The actual effects of the policies should then be pretty manifest and clear. So I think I understand why it just is highly uncertain, both what the policies will turn out to be, exactly what they'll turn out to be, and also what their effects will be in the near term. We just have to go through that process, and you know, it is just kind of manifestation of our election cycle and a new administration coming in with new policies.
I mean, given all of the change happening and the fact that we are in a period where things have not settled in yet, and that the Federal Reserve and you as chair are very projection, data-driven, policy-driven, how do you handle a moment like now? I mean, can you tweak your plans and projections? Do you just do you have to reset them?
So, what we've had since in the last few months is, from the staff, has been a placeholder. Rather, they wouldn't call it a forecast because it's so uncertain. They call it a placeholder. And that's kind of how we've been thinking about it. So it's a good time to take a step back and let things clarify. That's why it's just too soon to say what the appropriate monetary policy response will be to these new policies. It is just too soon to say. We can't say with any confidence today. So that's what we're doing. We've taken a step back, and we're watching to see what the policies turn out to be and the ways in which they will affect the economy, and then we'll be able to act. Fortunately, our policy stance is in a good place for us to do that. We're probably moderately restrictive, let's say, so it's not really tight policy, but it's which is appropriate since inflation is a bit above target. So we think we're well positioned to address whatever may come. And in the meantime, I'd say we're waiting for greater clarity before we consider adjustments.
Business owners in Wisconsin have told me that they can't make their plans. They want to expand. They want to build a new facility. They want to hire or do whatever the future calls for. They say, we're trying to look around the corner. We're not even sure where the corner is, and we're not even sure what's around the corner. Sounds like they're in the same position as you are a little bit.
No, we hear the same thing. Of course, we have an incredible network of contacts with businesses and also universities, nonprofits, all different sectors, through the reserve banks and also through the Board of Governors. And that's what we hear. But again, it's a process. We're going through it, and I think we will know when we know what the policies are exactly and what their implications will be for the economy. That will all become clear, and I think that'll be a time when people can make decisions. In the meantime, though, I get it. We're hearing that a lot from people, and we are kind of in the same place, which is waiting for clarity about what our policy path should be.
It might be months away.
We'll have to see.
Yeah.
As you're talking about placeholders right now and having something in the place when there's so much that we don't know, it does occur to me that this is not the first economic shock that you have steered the markets and the economy through. Obviously, there was COVID almost exactly 5 years ago. It seems similar in certain ways with a lot of uncertainty, a lot of shock, also potential disruptions to prices and to supply, which is very much in the Federal Reserve's wheelhouse. I mean, from where you sit, can Liberation Day be compared to kind of the economic effects of COVID? Are they totally different, somewhat related?
I think each situation is different. There was COVID. There was also then, in the response to COVID, then there was high inflation, and then there was soft landing, and now we have new administration and changes in policies. And every situation, it kind of rhymes, but it's not exactly the same thing. And so in this situation, what we face is what I mentioned in my remarks is you actually have risks for higher unemployment and higher inflation, and that's difficult for a central bank because our tools, which consist of interest rates, either slow down or speed up the economy over time. And higher unemployment would call for speeding up the economy, and higher inflation would call for slowing it down. So you can be in a situation, if we find ourselves in that situation, we look at how far each of the two variables is from its goal, and we ask ourselves, how long would it take to get back? And we weigh those things and make a decision about what to do. But there's no question that's a different situation, very difficult situation. When we faced high inflation, it was painful for the country, painful for the people that we serve, but we knew what policy needed to be. We knew we needed to raise rates quite a bit. During the pandemic, we knew what we needed to do. It was very clear the direction that we needed to take with force, and we did.
It's almost a situation potentially where the dual mandate is at odds with itself.
The two goals are, as we say, in tension, or they may be. I'd say that's not what we're seeing right now, but it's the effects at the margin right now would be for higher inflation and perhaps higher unemployment, but that's a marginal effect. I would say you're not in a situation like we were in the 1970s where the two goals were really both pulling in opposite directions and required. It's just very hard for a central bank to be the answer to a situation like that. But that's not the situation we're really in today.
One of the questions from the audience that we had is, if unemployment takes off and inflation takes off, which lever do you go for? Which lever do you, what do you do?
So we actually have we have a document called our consensus statement, or the longer version is Statement on Longer Run Goals and Monetary Policy Strategy. And the 6th paragraph of that actually contemplates when the two goals are in tension. And what it says is, think about how far each variable is from its goal, and think about how long it would take for each to get back. So in a way, it's an equation. You're comparing two quantities which each have two variables. And then you say, you look at that and you think, what do we need to do? And typically this doesn't happen very often, but if one of them is further away, then you would focus on that one. In the case of high inflation, they actually both pointed in the same direction. The labor market was overheated and inflation was very high. So both of those called for tight monetary policy. This could be different, but again, we're not actually facing that today.
I feel like there's another tension inherent in your job, which is that you're looking at the macro economy, at the global economy really, and the US places in it, but also the data you're looking at is very profoundly human, as Jim has been pointing out. Jobs, I think, and prices are probably the two most human pieces of data, and certainly in our day-to-day experience, probably the things that loom the largest. How do you reconcile those two things when you're looking at the data, like both the global markets and knowing that the data represents a lot of lives and jobs and egg prices and things like that?
So I think at the Fed, we always
The markets
keep a
have
focus on the
woken me
people
from
that
my
we
slumber.
serve, and
Oh,
we know
Jesus Christ.
Hey,
Walken.
and are very conscious daily that the things that we do have a real effect on people's lives. We know that, and it really does focus the mind. And
It's not a
I think when we
crash
talk to
yet.
people at the Fed, there's a very strong commitment to serving the public as well as we possibly can. Economic
Gotta unban
events are
Walken.
just
Oh, God.
Very, very unpredictable at times, and there are shocks that you can't see coming.
I'm not ready.
Nonetheless, our job is to, whatever happens, use our tools to bring the economy back to stability, back to price stability, back to maximum employment, and that's what we do. But you're right. We try to keep everybody in the room with us when we're thinking about what to
Pushing
do.
200, 5,200.
So in response to the last round of tariffs, Harley-Davidson, which is based in Milwaukee, moved some production to Thailand. Now the company might be whipsawed
Yeah,
again
we're flipping now down
by the new
to
tariffs.
52.86.
It'd be really devastating for sales, for employment, for the future of that company. But a lot of companies are in that same position.
Huge
And
moving
what do you
gamma
say to companies like
after this
Harley-Davidson
bounce.
and their workers?
So it just isn't, I really want to stick
Might have
to
some
our knitting.
legs.
I mean, we have this great thing called our independence of monetary policy, and that's critical for us to be able to do our job. But for us to keep that independence, we need to not succumb to the temptation to want to be a player on issues that are not assigned to us. And trade policy is one of those. There are many, many issues that people love to try to pull us in on, almost every issue really. And we just need to stick to our knitting, not get pulled into those things. And so trade policy is a classic one. Energy policy is another. Climate change, many immigration is not really, although all of those things have economic implications, and it gets argued that way. But if we treated those as our job, the case for our independence would disappear. So I really can't comment on, we hear the same stories like that, but honestly, the policymakers who are charged with that, they're probably hearing the same stories too, and they're reaching a judgment about what's in the best interest of the
I'm
country
suspicious
in
of
the
the
long
gamma
run.
and
That's what
delta
they
flip
are doing,
smoothness.
I guess.
It's
and
because
that's-
they're very
so
far
it's
out
not
of the
for us to
money.
comment on that.
Still.
What happens inside the Fed at a moment like right now, when there's so much change and quite a bit of uncertainty, when you're watching things unfold, what does that look like, practically speaking? What are people doing inside the building?
This is starting to turn into a
I'm
reversal.
very proud
I
to
think
work
it
with
just
the people I
broke
work with.
the
I can
reversal
tell you that
point,
in
actually.
times like this, or times like the pandemic, where the global financial markets were shutting down, the global economy was shutting
From
down, people stepped
5,200
forward
to
and they
like
said, "We've got this."
5,230,
These
there's
are
very
career
little upside
people
resistance.
who were here for the global financial
So if we
crisis.
clear
They've got
if we clear that like
25 years,
5,203
35
level
years of experience
off to the
with
races
crises, and they step forward and it's just incredible. what
maybe
they
back
can do
to
and how
like
good they
try
are.
to
It's
test
great honor to
VWAP
work
on
with them.
ES, which
So
is like
right now isn't that situation.
52.78.
We have the situation we have. So
Pretty close to
our
the
trade
gamma
people
flip
and our
now.
inflation people and our macroeconomists are all working hard to, to kind of digest the news of this week, and try to filter that into the forecast that they'll make. And policymakers are doing very much the same thing, and we're reading everything we can about what's happening, and lots of outside analysis too. We don't have an FOMC meeting until May 6 and 7, so that's really a process that lasts several weeks, and we're not quite at that stage yet. But we're kind of thinking ahead to that and working through all of that. I will say though, it feels like we don't need to be in a hurry. It feels like we have time
Really?
to. Yes, it feels like we don't. No, I mean it's like I said. You have inflation's going to be moving up and growth is going to be slowing, but it isn't really. To me, it's not clear at this time what the appropriate path for monetary policy will be, and we're going to need to wait and see how this plays out before we can start to make those adjustments.
Question from the audience. One of our Cebu members is, are you in contact with other central bankers in other countries at a time like this?
Yes, pretty frequently. Absolutely, I am. And the same was true during the other crises I've been through. Not only that, though, we do meet very regularly. The IMF World Bank meetings here in Washington twice a year. We go to Basel multiple times a year to meet. That's all central bankers. And there are also G20 meetings, G7 meetings where we're.
You said a bad thing.
So we're kind of regularly meeting and talking. And when we're not doing that, we're also texting each other. And
Is there a group chat?
I'm not at liberty to say. No, there's not.
And have you talked to those central bankers this week?
Recently, yeah, I didn't want to get too specific about this, but yes, I have.
What's their sentiment? Can you characterize that?
I'd rather, again, I don't comment on what my international colleagues say, or it's not appropriate. But we're talking about events, we're talking about the implications for the economy. We're discussing what we're hearing from markets and from business people and for from the elected governments too. It's all the things you would expect us to be talking about on a regular basis. It's one of the best things about this role is that the central banks have a lot. We're all non-political, so we think about things in quite similar ways, and they're real bonds. We're not lobbying each other ever on policy. It's just never. That's just not a thing, because we do our policy here, they do their policy there. But we develop really, really good relationships and bonds with them, and it's one of the real pleasures and benefits being able to talk about this, just not only with the great people at the Fed, but also with the leaders around the world.
I mean, it's interesting because it is a job of enormous responsibility and power, but it's also a job. How would you characterize the job of Fed chair? Like, how is it as a job?
Honestly, that's what it is. I really feel just like another person doing that job.
Really?
Yeah.
You just like...
That's how it is. I'm doing a job. I have a job to do. I actually really like the job. I like it a lot. I enjoy it. It can be stressful at times. Nonetheless, incredibly interesting, great people to work with, really important. What more could you want? But that's what it is. And, I'm blessed by working with great colleagues who are really committed to getting it right. I mean, fully appreciate how important it is that we get it right. And do everything we possibly can to bring the best thinking, the best analysis, and debate things, over and over until we feel like we're in the right place. At the same time, there is no certainty in this. You can be wrong because the economy can zig when you thought it was going to zag.
So your term as Fed chair ends about a year from now. What do you think about your job security?
I fully intend to serve all of my term.
Excellent. I mean, as we're getting close to wrapping up, I did want to ask something a little bit out of the box. I think because you do have a position of such great responsibility, people are very curious about you, and I think people tend to read into everything a Fed chair does, small gestures, word choice. I know it's part of our jobs in this room to pore over every word you choose. I did want to ask about one thing that I've wondered about for years, which is your tie. You always seem to wear a purple tie, and every time I think I've seen you, you've worn a purple tie, and I'm wondering if there's significance to that?
Well, at the beginning, the only significance was that I like purple ties.
Okay.
But I will say, so then the next press conference, I reach for a blue tie or a red tie, and I go, maybe not, And so I wind up wearing purple ties. And then it becomes a thing, and now I definitely wear purple ties all the time.
Okay.
But I felt like, it just felt a little awkward to be wearing one that was identified. We are strictly non-political. I can't stress that enough. We are not, it's not that we're bipartisan. We are non-political. We don't do that. And so purple was a good color for that. That's all. Plus, I like purple ties.
Sorry, I didn't give you a purple guitar pick. I have one other Milwaukee question that I overlooked here, but in Milwaukee and other parts of the country, the housing market is out of whack. In our market alone, in southeastern Wisconsin, there's 5,000, the market's out of whack by like 5,000 houses that need to be on the market for it to have equilibrium. And a report this week said tariffs could tack on some $6,000 to the cost of building a new home. How long are people going to sit on their cheap mortgages from COVID? Thank you very much. And before they move on, before the market frees up.
So you have several things there. The first is we just haven't built enough housing, and we haven't kept up with the demand for housing. So there's an underlying shortage. Before the pandemic, there was a real housing shortage. And by the way, that's happening in many comparable democracies around the world. The second thing is, lock-in, as you say. There were very, very low mortgage rates during COVID, and people are kind of locked in. It would be very expensive to move, and that'll of course wear off over time. And you also mentioned, the costs of materials that might be imported, lumber and nails and things like that. And yeah, and also labor, a lot of labor from home building business has been traditionally immigrant labor. So yeah, the sort of new build market, it may face some cost pressures as well. That may very well be the case. That's what we're hearing from home builders, for example, both on the labor side and on the materials side. But even once these short-term things happen, we're still going to have not enough houses. And so it's all, I think for a long time, we're still going to see upward pressure on housing prices, maybe until population growth slows or until we catch up.
You mentioned that we're kind of in a period of waiting right now to see how policy ripples out through the economy. Here. How long do you expect that to take? How long do you expect these big policy changes to show up in our day-to-day lives and prices and supplies and?
So maybe lose 5,200 a second time.
For a while, we didn't know.
Yep. Testing it now.
What was coming on April 2. Now we know what came on April 2. We don't know. There's a lot more to be said about how all that shakes out. But we've come through that, and I think you now know that the tariffs are larger than people were generally expecting. That much you know now at this point. And you'll know more as you start to see the effects on the economy. So as the months go by, it's hard to say exactly when you'll know. But clearly that learning process is ongoing. We're just seeing that these are new policies, not just the tariff policies, but the other ones as well. There'll be important fiscal legislation coming up fairly soon, and there'll be regulatory changes, significant regulatory changes. You have to really look at all of that to see what the overall effect will be. So I can't give you a date, but all of that is now kind of coming into place at sort of the speed you would expect policy changes to be, and then we'll begin to see the real economic effects as the year goes on. But again, I can't give you a really specific date. Is
the fiscal legislation the tax cuts?
Well, yes. I mean, I know they're contemplating, and we don't comment on fiscal policy, but what I read is that they're contemplating, making the Tax Cuts and Jobs Act cuts permanent, and also perhaps some other things as well. We wouldn't be, we have sort of a placeholder for that too, but that's really not ours to comment on. But that's what I was talking about. Yes.
So I have a question from a friend in Milwaukee who said she has clients that have deals ready to go, businesses that are ready to launch from their garage to a private equity deal, and they're just stuck in their garage right now. How long do you think, what do you think the impact of the uncertainty these days will have on the private equity deals?
So again, we're hearing a lot of that. People are they're just kind of waiting for clarity. So, and I can't tell you when that will pass, but ultimately it will pass. We know that at a certain point we'll know enough to know what the uncertainty will decline, and we'll be able to see with real clarity what the policies are and what their effects are. So, you're right. We hear the same thing from businesses and from people that they're kind of waiting and seeing. There's a lot of waiting and seeing going on, including by us, and that just seems like the right thing to do at a time of elevated uncertainty.
What economic indicators are you watching right now? I mean, very famously, you look at the CPE and obviously the CPI and things like that, but are there any economic indicators in this moment, in these circumstances, that you are watching, focused on,
Sure.
interested in?
So the basic two big data pools are the data around prices and around employment. And we get, in the employment area, we get just really, that's an area where we actually get pretty good data, although the survey response rates have been lower. Nonetheless, we get a lot of different data, and it's not just unemployment, it's participation, it's by age group and things like that. It's wages, it's many, many different things. It's jobs, it's quits, all the job creation, quits, openings, all those things. So that's one thing. On inflation, we target PCE, personal consumption expenditure inflation, not CPI, and the two are broadly, they move they move together, but 25 years ago, the Fed switched to PCE. The public looks at CPI. It's kind of a little bit of a thing, but because we think, it's really just a better way to capture the inflation, the cost pressures that households and businesses feel. We think it's a better measure, and that's what we look at. But they're not that different. I mean, they're just, they look at different measures. Ultimately, they're pretty close together. Those things. On growth, you look at what's happening with consumer spending. The economy is overwhelmingly driven by consumer spending. So you look at how are consumer surveys, how are they feeling, how are they spending? Sometimes the surveys are very negative, but they keep spending. That's been happening really for a while. People spent right through the pandemic, and they spent right through this time of higher inflation. They kept spending, and forecasters kept thinking, like us, kept thinking that consumption would slow down. But that's a really critical thing. After that, business investment is a big chunk, and you look at that, and that is also susceptible to sentiment. Businesses, if they don't know what to do, they're not going to do an acquisition, or they're going to hold off on building a factory or a plant or hiring people and things like that. So we look at, I could go on for a long time. We look at a lot of data, and we try to make sense. We also talk to people who are in the real economy. I grew my career was mostly in the private sector, talking to people who ran businesses. And for me, the story doesn't come together until I actually hear from people who are in the economy doing things and what they're feeling and seeing, and then it sort of fits together.
I feel like we missed the test
like
a little
via the Beige
bit.
Book, or
The
just
Beige Book, thank you for mentioning the Beige Book, and I hope you read it.
I love the Beige Book.
See, that's great. Everyone should read the Beige Book. The Beige Book comes out sort of mid-FOMC cycle, and it's all the 12 reserve banks and all of their incredible context, what they're saying about what's going on in the economy. So if you want to know, you can look at the national data, but if you want to know what's going on in regions and at different industries, you look at the Beige Book. So it's really a critical thing. And actually, the reserve bank system that we have is an enormous strength of the Federal Reserve System. We have these 12 reserve banks with their own, economics departments and own participants on the FOMC. So that's a great thing to look at.
I'd like to ask you about another body of work that many of us know that you're familiar with, and that's the Grateful Dead. So, question for you, sir. American Beauty or Terrapin Station?
American Beauty.
Well, it's not even a
Not even
pause.
close.
That
Ask
was
me a
so
hard one.
fast.
Working
No,
man's,
that's my era. That's my era.
working man's dead?
Yes.
Or Europe 72?
Oh, both. Yeah,
Well,
that's
come
my
on.
era. We're in the same era here. So that's, for me, it's late 60s to mid 70s. So
Touch of Grey, what do you think?
it was their only hit, but it's a good song.
Okay.
Yeah.
Finally,
Are we
there's,
going to do this?
I feel like you're speaking another language.
there's a well-known Grateful Dead bootlegger who, with the, believe the permission of the band, Dick's Picks, who's put
Yeah.
out. So what's your recommendation of those hundreds of
I
Dick's
don't
Picks?
have any Dick's picks. Like I said,
Come
my
on.
my real interest was late 60s to mid 70s.
Yeah.
And I saw them a bunch of times, and I know every note on every song from that era, but since then, I've been busy, actually.
Well, we thank you for taking time out of your schedule to join us here, and we appreciate your work.
Thank you very much. Thanks, everybody. Thanks, Jim.
Thank you.
So the Fed's going to do nothing. And they believe they have time. So he's pushing back against Trump, which is interesting. Kind of killed the bullishness off a little bit. We still have some stability, but not nearly as much. Starting to get some puts to the downside, sold calls to the upside. Confidence in the rally after what Trump said about cuts is fading a bit. It's interesting though, because if cuts come too early, I mean, it's a negative. You know, if Powell cuts right away, that's not going to be a positive for the economy. So, I mean, I guess it's just a question of leverage. There's a lot of risk in that. Anyway, losing 80 again a little bit here. Keep getting support around 70. Maybe that'll wane. Support 70, a little bit at 60. Then next major support to the downside's 50 though. Left a little upside gap here. Did not go back to fill it right away. Filled it there aggressively. That was rejected. See if that sell-off continues and pushes us below 75. Usually that kind of like backside distribution bounce is not very bullish. Sometimes it is though. Vol's kind of flat here. Not a lot of gains unless we lose 75. Local consolidations just broke its trend to the downside. Lost 75 a tiny bit. Bounce back, lost it again. What a continuation here. Thanks for learning. My IWM calls are dead, but my overnight puts went 10x 2 nights in a row. Nice, man. Yeah, there was a really good opportunity to get out of IWM right before the tariff announcement. But it's understandable if that was missed. Or at least get out of some exposure. I don't know if you average down or not. Get a little bit of support here or no? Some vol shorting coming in again. Is a bit of resistance to the upside. Starting to get a lot more position concentration around spot too. Pulling back towards 75 again. Lower high on the bounce. The problem here is we just keep getting more bounces. Still haven't retested 5,200. Getting really close now, though. Maybe we finally get it. That'll be a breakdown of 167. There we go. Very minor support here at 60. And then next major support 50, slip of 50 to 40, slip of 40, 25 to 20. It's left a gap to the upside, but it doesn't seem to matter much. We slip 5185 ES, we'll probably head back down to the low of the day. VIX back above 40. $52 getting pressured. Selling off a little more. I almost expect like a little support here. Hmm. There's a gap to the upside at 77. And yeah, $25 bounces aren't impossible here. Failure to get 52 means we probably work back down again. Um, 42 test. We fell 40, clean shot down to 25. Looks like this is going to go pretty quick given the uptick in vol. The out of the money demand for puts. Tested 47. Rejecting a little bit. Testing again. Also rejecting. Some short vol coming in here, but I don't know if it's enough. Might just get squeezed out. So that's starting to, ouch. Already lost. Small bounce on 37, but not much. Still pretty low volume. Hmm. Just need a little bit of momentum here, I think. There we go. Still trying to short vol here. Precarious. One second. All right. How's the market crash coming along? $54. Did you see the flip levels are not updating? No. Oh shit. Is that just because I haven't refreshed, or? Oh, interesting. I wonder what the fuck happened. Careful of the double bottom here. These can kind of rip. What did we bounce off of? 51.29. 51.50 is a resistance. Okay, so we tested 30 twice. What was the second low? 31. Okay. Yeah, if this fails 40 again, probably back to the low of the day or a new low for the day. It's a slower walk down, but it's, I mean, it's clearly breaking down. Breakout above 50 would be bullish, though. So that's the thing you have to worry about on the double bottom. I mean, exchange data is probably getting fucky. We haven't dropped super hard yet, but you know, once you start doing like once you start getting like VIX at these levels, you start to get a lot of really, really fucky, super fucky data. Like not just from Opera, but like NBBO, NYSE, NASDAQ, CME. CME data will like shut off randomly. Like it'll be in a futures contract, you just won't get any prints to the tape for like several minutes, and then it'll update. You don't know because you can't see the chart. Which chart? It's true. There's no options on SRF. I don't really like you that much. I like SRF, and I've had Eura exposure before. The bid ask on my $300 in the money puts fluctuates between 10% and 30%. Yeah, you can mostly ignore that. I mean, you just sell them at intrinsic value at that point. I didn't mean you personally, Trash. I just found out that there are horse breeds that are worth 700 million. Are you trying to buy one or? Ooh. All right, failed 40. Using 34. Testing 34. 3320 prior support. Vol's moving back up again a little bit. Still lower than the earlier highs from today. Not a lot. Bounced off 34. Hmm. Retested 50. Hmm. That was interesting. Big fucking vol short. Holy shit. Go watch for support at 47 here. This breaks down, probably bearish again. Okay, there goes like 45. So maybe just like trying to rescue a position. Back down to retest 30, I'm guessing. How low could this go? 5100? 5090? You mean like overall? Who the fuck knows? Back to a PE of 16. Interesting. I wonder if this is going to fail 40 or not. There's the 37 test where we just bounced. So full mean reversion on the bounce. And starting to push a little lower. There's a third test of 33. Ball's starting to push up again. Let's see if we lose this and start dropping into the 20s. Gap to the upside at 41.
Special Agent Utah put their pickle in my jar. How likely are bank failures in
How
the
likely
near
are
term?
bank failures in the near
Pickles are
term?
the
I mean,
three.
rates are down, so I don't think it's a big threat right now. But I think if if we see rates spike on either a Fed hike or a big bump in inflation, the inflation would come first. So I guess that's what you should pay attention to. But that could be interesting. Getting fairly close to retesting the low on ES, but not quite there yet. Oh no, new low on ES. 2 ticks. Nice. Okay. So maybe this is actually gonna fail. We need to lose like 27, or we could start our march down to like 15. Don't forget that 20, like 51.19 or whatever it is, was the August low. So still probably a significant level over the last year. Not that any of the other significant levels have mattered much, but something to think about. Yeah, we bounced off like 118.78 earlier. Hard. So probably a fairly significant amount of short puts down at like 5100, 5590. Those will matter somewhat. Two gaps to the upside, 28.41. That's a good play for this weekend. Straddles, probably, if you can afford them. Our $100 pump today was off of last year's low. Yeah, and it failed. This is where I predicted the market would end this week based on the August low. Remember, if you watch the end of days, I was like, if we fail the upper trend from back in like 2023, we're gonna drop right to the lower trend, which is also the low of August. Below this, we've got like April 24's low, which is around 49.50. If we lose 49.50, the market's just gonna crash from there. If you can't afford straddles, unhedge puts and cross your fingers. I mean, there's like inverse condors, inverse butterflies. Those can be, they're not super profitable, but they can have some profitability and they're a bit cheaper. There's like ratio spreads that help you offset the cost of volatility a little bit and the cost of theta if you want something like longer dated. So there's options. Is it almost time to break out the pimento? Oh no, we're not there yet, but there probably will be one at the bottom of this. Loving the GME options, Jane. GME's still holding $20. Not bad. Starting to get more liquid though. It's almost past the ETF FTD period. Once that clears through, they're probably going to short the fuck out of it. There goes, there's that 51.15 test. So lower low for the day. Still two upside gaps, 28 and 41. Be very careful of capitulation bounces. Very. If you can afford out of the money hedges, those are usually a good idea. If we close below August low today, that's gonna be fucking terrible for the weekend. Jesus Christ. Fucking VIX at 41. Imagine buying Nvidia at $150. Someone bought that. Is Nvidia back to where I shorted it yet? No. One day. You're holding your positions, or have you been taking profit? I started taking profit on some of my straddles that I've just left open because we keep tanking every day. I have some that expire today from earlier this week. I have a few that expire next week, but they're getting like notional, like position size. They keep getting smaller and smaller. So I have some like let's see. hold on, let me bring back this, because we're about to test 5100, and that's important. Let's see, I have so I have 5650 puts that expire today. And I have some 5460 puts that also expire today. Those are from the last 2 days. Just my like regular overnight straddles. The calls are all fucked, but and then I have June puts and I have June 2026 puts at 5200 and June. But I was actually like not super over leveraged on this. I mean, I'm making money, but not nearly as leveraged as I probably would have liked to be. I've done really well on futures on the way down, so that's been nice. Also. I know, Grackle. One year of S&P wiped out at current price. Time travel is amazing. I told everybody it only takes a couple days of down to fucking wipe out all the gains that the bulls had made over the prior year. But everyone was like, no, that's bullshit. Stocks only go up. I've had to listen to so much bullish nonsense for so long. No, not you guys. You guys are all basically perma bears at this point, which is, you know, starting to not be a good thing anymore. So we're gonna have to work on the pickle jars mindset. Not that there isn't always opportunities to make money on puts if you're smart about when you buy them. There are. It's very profitable to be a bear, but it does tend to benefit less experienced and investors to be bullish on occasion. Poopy told me today I could buy a house soon. Sounds bullish to me. Everyone will be able to buy houses soon because no one will fucking want them. Please don't change us into bulls right when we start a bear market. No. We've got months of high volatility ahead of us. This is going to be fun. The VIX 3-month is at like 35 right now. But there will be bounces, and they will be nasty, and don't fucking short them until they're done. You know? Remember August of 2022? When you guys kept, like, fucking just averaging up puts the whole time? Like assholes? And I did too. But I had theta. Don't do that. Remind me. But that also means that we get like October 22 low moments, right? Where the market rallies like fucking $1,000 in a week. I love that shit. Also, we're not at a crash yet, technically. Just really, really close to one. Yesterday, the Schiller PE ratio is still at 33. Remember that the median is 16, the mean is 17 over the last, like, 200 years. 140. Where did the pickle theme come from? So it's like my old gamer tag was Gherkin it because I was 14 and I thought it was funny that it was like both a pickle and sexually sexual innuendo. And yeah. Oh look, we bounced. I might reject on 20 though. Gross. There's still a gap at 28 to the upside, like right here. And then there's another gap further up right here. 42. Yeah. Yeah, 41, 42. It's been 2 years. Dude, let's draw a pickle. Alright. Is this thing on? Alright. You're out of practice? I am not. How dare you? Tested 25. This might be resistance. Ah, poop. Okay, we filled the gap. Well, the 128 gap. We didn't fill the 42 gap. Hmm. Interesting. Left a gap at 125 to the downside. Bouncy. A little bit of a vol short. I haven't filled the downside gap yet. Downside gap at 125. That would give us like an inverse head and shoulders, which I think we might get given the amount of buy support on ES here. There's the 25 test. Not quite a failed bounce yet, but almost. Still selling off, vol picking up again. This failure will tell us if there's a continuation, I think. Yep, ouch, damn. Doing bigs. Big downs. Straight to the 15 test. Vol right back up again. Lower high on the bounce. Maybe some consolidation around 20. Like if we fail here, lower low. Weird back end distribution bounce. God, I hate that shit. Retest at 30. Any news? Five. These are almost all getting rejected. The higher high on that's kind of interesting though. Back above 40. If they break 50, they can push out to 75. Hmm. I think they're still shorting vol here. Yeah, they filled the upside gaps. Unless there was one from earlier. There's one at 177 from earlier today that's unfilled. There goes 55. Build the downside gap at 148. Still holding 150. Bullish consolidation. It's the next leg up. More vol shorting coming in. The 50 put. New high. There's a high at like the 5200 test that's kind of important. 50 delta is supportive. Yeah. They can keep pumping. I think it's going to be kind of slow, but if they can get through this resistance and get some more supportive delta in the money, might be in a good spot. Oh, did the gamma flips? No, we didn't catch up to spot yet. Those are so fucked up. Just need to lever up here. Trying. Mm. Ooh. Weird spike. Lost 47. Rejected on the 50 test. Breaking back above 50 a little bit. Mm. Lower high. So far. Mm. Mm. It's the 5200 test. Yes. Well, not quite the 5200 test, I guess. Where the fuck is VWAP? 5259? Rejected. Some momentum going into the 50 test. Spike and vol there. Small one though, still. Mm. Hmm. Mm. Testing 42. Bounce off trend. Vol's starting to turn up. 2 weeks ago, I'd blown up my accounts at $400. I built it back up to 2K by using Gamma Strike and going back to my rules. Today, I'm out of PDT. Fuck yeah, man. That's fucking awesome, dude. Congrats. Seriously. That's super dope. Mm. Head and shoulders. Those aren't super reliable with volatility this high, but maybe. Guitar stuff, thank you so much, man. Guys, give Guitar Stuff a shout out for hooking you up. Welcome to Shop. Tricky. Still failed to test 5200 with the wick. There it is. Megaphone? Not quite. Tested 72. Fix back to 40. Left a gap to the downside at 63. Did not fill it there. Profit taking. All that really matters here is 50. So you'd have to sell off into the support there. All right. Yeah, the inverse head and shoulders off the bottom failed here, so looking like we're headed back to 51.16 or 51.01. I guess we'll see if we set a new low. We came kind of close to it on the last test. The puts are piling in. You can look at VIX. It's fucking going nuts. Never do that again. I lost all my money. You're gone. You're gonna hate what's coming next. Mm. I'm gonna lose 20. A little bit of consolidation, but Vol's still just moving straight up. Uh, there goes 20. Bounce. Small bounce. Stuffed. Maybe like another one. A little bit of vol shorting coming in here at the prior level, 20, 20 and 15. Where we bounced last time. We could form a head and shoulders off of this with a retest at like 36. I think vol's kind of too high. Like we're more likely to just keep breaking down, but Oh. 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 Weird fucking bounce. Retest 19. 20 test got rejected. Low, maybe. Fall turned up again. Staying under 15 this time. And pushing down into the $10 strike. 110. $50.50? No fucking way. Jesus, it's only 225. Shockingly, market crashes are bad for equities. You can you can sell in the money calls to protect the downside on them. But if you're buying puts on the index, you should probably be doing something to protect the rest of the stuff you own. Wait, are we crashing? NASDAQ is. Kind of a brutal one, too.
Rhino put their pickle in my jar. I
Ivy's
made so
increasing
much
at the
money
moment
on
still.
it in 4 days. I don't know what to do with it.
VIX
So
at
there you go.
4250.
This is 30 Canadian dollars, and you're the only part of the US economy I want
This
to give
seems
my
pretty
money to.
significant. Whether
Stay
or not we
golden,
can
honey
hold
boy.
5100.
20.
Why is MSTR BTC seemingly unaffected by this sell-off? First of all, yeah, I answered this earlier. The big one is leverage. Leverage is of tantamount importance right now. The second factor, which is pretty meaningful, sorry, 1 second, is that, you know, sentiment-wise, it's considered an inflation hedge, much like you know, treasuries, but without nearly as much demand for that. The big problem with BTC in a situation like this is, in fact, it's really just leverage dollars, and dollar hasn't really slipped all that much, shockingly. I mean, you know, it's dropped a little, but still like over 100, which is quite high historically. So, yeah, I mean, as long as it's being used as like a leverage dollar instrument, then it's in a pretty safe spot. Starting to fail 5100 here. We got a new low on ES, by the way. All right. If this fails and 90, it could get all the way down to 50-50. I've actually got a take off. I just stopped out of some of my last puts, so yeah, keep an eye on it. Obviously, bulls are struggling a little bit with getting a bounce here, but be very careful again of capitulation rallies. It doesn't hurt to have some kind of out of the money hedge. 5100 a fortress? I would say hardly. We've already lost the major technical level on SPX. Circuit breaker soon? No, but there's still an hour and a half left. Thank you. I could not have done any of this without you. I'm really glad you guys are kind of killing it. I remember the last time the market hit 5K. Yeah. You mean 5100 back in August of last year? That was fun. Check DMs, you'll have a chuckle. White House official on President Trump's thinking right now, per Washington Post. He's at the peak of just not giving a fuck anymore, said White House official with knowledge of Trump's thinking. Bad news stories, doesn't give a fuck. He's gonna do what he's gonna do. He's going to do what he promised to do on the campaign trail. How giddy. You mean fuck over the American consumer as hard as he feasibly can? I don't. I was hammered. If you guys haven't checked out GS, I highly suggest it. It's pretty good shit. I haven't had a lot of time to tool around with futures today, but I think, yeah, I got like an 80% win rate. Made like 4K off of that. Mostly just been trying to manage and hedge off like the capitulation rallies against my puts. So I've been a bit busy. What's the account at now? I withdrew it back down to 5K. It's at 12. I didn't want to go back down to like $250. That's pretty neat. Best review we've ever gotten. Rhino, I've made so much goddamn money on puts in 4 days. I don't know what to do with it. So here you go. This is $30 Canadian, and you're the only part of the US economy. Wait, what? I want to give money to Stay Golden, Pony Boy. Thank you so much, Rhino. I appreciate it, man. Devastating news in TMs. Nintendo switched to pre-orders because of Trump. Nintendo delays Switch 2 pre-orders because of Trump tariffs. Oh no, GameStop's fucked. What's the next major downside support? Fuck, like 49.50. We failed. Oh, this is actually really important. So let me cover this before I take off. So on the daily, we failed the long-term trend from the October 2022 low. Which means that our next downside support is 49.56, and then 4,700, and then maybe like 45. Let's look. Hold on. Yeah, it's gonna be like 49.53, and then maybe 56.83, and then 4100. Below 4100, shit gets weird. Like 3800, 3493. If we get under 4850, this thing's gonna fucking tank and VIX is gonna go to like 100. It's really significant that we failed the long-term trend on the monthly, though. Like, very, very significant. Did you get kicked off Discord? Maybe. Yeah, looks like I did. So, yeah, I mean, this could very easily continue to sell off over the weekend. We're under the 30-month moving average, like the 30-month exponential moving average. If we close under, what is it, like the under 50.89 today, and we very well could. The 200-month moving average is, or the 50-month moving average is down at 56.56. As far as the daily goes, you know, we're getting very close to a death cross on the SPX. The 50 MA at 58.44 with the 200 at 57.60. So it looks fucked, you know. How is it considered failed if we only tested just below it? Because we broke it. We broke it to the downside. So it is a failure of those trend support. Whether that support is going to completely fail would probably be determined closer to like 5,000. 5,000's a nice psychological number for people to get hooked on. Any backtracking of tariffs, yeah, and this thing could rocket 10% overnight. Although, I will say 10% to the upside only brings us back to like 5,600. Yeah, options are absurdly expensive. Jen, holy shit. Thank you so much.
Have a drink on me.
Did you kill it on puts? That's fucking awesome. All right. Happy Friday, Eric. Have a drink on me. I just read her message. I'm playing $75 out of the money 0 DT, and it's been fantastic. Nice. Yeah, I mean, you can, because fucking, what else are you gonna buy? You can play very far out of the money options. You can use spreads to offset the cost. Spreads will be a fixed price regardless of the volatility, because you're gonna be selling the vol on this on whatever strike. The wider the spread, the more expensive they'll get. But that's one way of getting exposure. But you can scalp gamma. I mean, it's like fucking volatility is so high that, you know, everything's just super sensitive to any change in spot. So there's opportunities for that too. 50.89. God damn. It just keeps going down. I mean, it's like, it's beautiful, honestly. Oh my god, I can't wait to like buy stocks again and they're not like over fucking priced. Is Palantir back to $4 yet? No. It's got a ways to go. Wow, that really hasn't sold off all that much. Dole? Ooh. Hmm. Hmm. Dole's a domestic distributor. They'll probably be fine. I mean, they're technically a domestic distributor. How's BTU? Down to $10? Holy shit, this Chinese tariffs fucking wrecked it. I might buy some of that. That was cheap. Oh, did you see that Brazil didn't get hit as hard? They only got 10% tariffs. Everything's gonna tank in a crash. That's the way stocks work. What did I want to look up? Hey, AQN's still doing alright. Nice. Are there any sectors that aren't just fucking dead? Ouch. Ugh. This is fantastic. Meta's down 15%, Apple down 15%, Nvidia down 16%. This is over the last week. Tesla down 13%. UNH is holding up. Visa's down 10%. God, my JPM and BlackRock shorts are just creaming all over the place right now. Ooh. Is Zom almost a good buy? No. Not yet. It's getting there. Getting close. Alright. I'll leave you guys with this. I'll have it set up to turn off at 4. Enjoy the rest of your Friday, guys. I'll see you Sunday for the member stream. Thank you so much for tuning in. Later, everybody.
town where trains pass slowly. I sip my coffee, dark and strong. Prices rising with the sunrise. Each day's harder, feels so wrong. Jerome Powell, you're no hero, not the man we thought you'd be. You're just a shadow of Volcker, Arthur Burns in our memory. I see the shuttered storefronts, places my granddaddy built. Folks are pinching pennies, dreams erode under the silt. You promised us salvation, but your silence digs our grave. Jerome Powell, where's the justice? Our homes we couldn't save. Jerome Powell, it's the path you chose to take. We're aching from inflation while you gamble on our fates. You'll never be a Volcker, your legacy will fade. Jerome Powell, we're all stuck in the mess you made. Families gather around the table, stretching meals that are too small. Mama's crying in the kitchen, hearing every child's call. You could have changed the story, eased the burden and the strain. Jerome Powell, we're all stuck in the mess you made. I remember when it all started, promises of skies so blue. Now we're walking in the shadows, wondering what you're gonna do. Every speech you mumble just leaves us in despair. Jerome Powell, we are waiting, but it seems you don't care. The echoes of your silence scream louder than your words. We're drowning in this struggle while your hope flies like the birds. You could have been our savior, but now we wear the chains. Jerome Powell, just a cautionary tale of a leader who refrains. Of your silence scream louder than your words. We're drowning in this struggle while your hope flies like the birds. You could have been our savior, but now we wear the chains. Jerome Powell, just a cautionary tale of a leader who refrains.